Yeah.
That's what you just said.
Just for basic, just starting with that's just a list of some common tax deductions for realtors. These are extra copies if you want to, for anybody.
I've got to leave a little bit. You're going to stay here till the end?
It can just be confusing sometimes to know what you can write off or what you can't, or just some things that you hadn't thought of. And so those are just some common ones. That's not everything. There's also mileage that I would advise you to keep up with, maybe with an app or however you guys do that. So, question?
Okay, my question is surrounding continuing ed because I've always so books, audio books, things like that are
Deductible.
as long as they're specific to real estate or
specific to your profession, to advance, to keeping your license, to keeping anything like that.
What about personal development?
Sure. I mean, as long as it's not like just a new fiction novel or something, anything that is helping you gain knowledge for real estate, I think is deductible.
Thank you so much.
With mileage versus, I know some realtors are advised to, if they purchase a newer vehicle, SUV of some sort. I've heard mileage is a better way to go versus writing off the vehicle, and I don't know exactly what the terminology I'm supposed to be using, but you probably understand the flow.
Yes.
Okay. Yes.
let's say somebody
I
got
don't
a
know exactly
Honda
how to put
Pilot,
it
for
to me, and
example.
yeah, I just want to handle mileage. I bought that in November though, but Christy just bought a Jeep, so tell me how that works.
So that kind of goes into what we were talking about, where Greg talked about LLCs. So if you have the business, if the business bought the car, you can actually depreciate the vehicle and add it to the depreciation schedule. And then if things like car insurance, repairs, maintenance, all of that becomes deductible, as is the expense of the car. But then you can't also do mileage.
It's either or.
Can you drive it personally? then?
Yes.
Okay.
But I mean, for most of you right now, most of you don't have LLCs right now.
We do.
No,
You
we
do.
Mhm.
You do. Okay. You do.
Everybody does.
But
I think not.
okay.
We
So
do not have an LLC.
Oh, okay.
We do not yet.
I would think honestly for you guys, I mean, you'd have to look at it on paper and the cost of the vehicle, but mileage is probably your biggest expense as a realtor.
I have a question how it would work for you guys. Because you and Christy, unrelated, if they bought cars, they couldn't really put them in the LLC if they're two different family. I mean, logistically
Exactly.
speaking,
Yeah.
two different families.
It's not like theirs.
It's not
or
like it
hers.
belongs to the LLC and it's
Like
like,
Christy and I are not related. We're just partners. So we haven't formed an LLC. We probably will, but
So you want to
The
do that
question about-
together as a partnership?
that's the
we
thing.
would. We
And as a
would form our
partnership, you would be
LLC.
equals, and that would be who, like normally, like in someone like, let's say, Amy Brock, she would have her car maybe written off or whatever, but her buyer's agents would not.
Mhm.
But in the case of being equal partners,
I think I think a really good place for us to start is the S
Okay,
corporation.
Okay, let's start from the beginning.
sounds good. Let's go.
Okay, so once you have an LLC, you can elect for the LLC to be taxed as an S corporation. So currently, when you make, at the end of the year, you have all of your income, you have all of your expenses, your net income comes out to $80,000. You actually have to pay Social Security and Medicare on the employee portion of that and the employer portion of that, because you're self-employed, which comes out to about 15.3%. So if you were a W-2 employee working at Rudy's, you would pay half of that and Rudy's would pay half of that. So that comes out to 7.65.
Is that the same thing as self-employment tax?
It is. It's just when you're an employee, it's split and you only pay half and the employer pays half. When you're self-employed, you pay both.
Okay.
The advantage of an S corporation is that you become an employee of the corporation. You get a W-2, you pay your half, the S corporation pays their half, which becomes an expense. And then you can also continue to take distributions that aren't subject to self-employment tax. So then at the end of the year, you paid yourself $40,000, the business made $40,000, but you don't also have to pay self-employment tax
On the
on that
40,000.
other $40,000. Over the span of your career, that's a lot of money in tax saved. It's a little bit more expense throughout the year. You have to keep up with payroll and payroll taxes. I do that for Kimberly. It's,
So glad she does it.
it's a small expense compared to the tax you're saving. You'll also have to file an S corporation tax return. and a personal tax return. That's a little bit of an extra expense.
So
Over
S corporation tax return
that's the LLC will be electing to be taxed as an S corporation. Currently, your LLC is probably taxed.
a disregarded entity.
It's a Schedule C on your personal.
So does that mean that you're paying corporate taxes?
Nope, it's a flow through entity. So
The S corp is?
it's basically just an information return that you file,
Oh,
and then you'll have a K1 that'll go on your personal tax return that'll say this was your income from this, and then as an S corporation that won't be subject to self-employment tax. It will be subject to income tax.
okay.
So how does that work when we get our 1099s? Our 1099 are they in our personal names? If you have an LLC?
So
This
that's
is my first one.
Mhm.
I would
Ours
assume that
came-
mine will be an LLC.
I think the 1099 I got here was in the LLC name, right? You don't remember?
so that is something I do really want to check with your broker about
Okay.
because it does need to be
In the LLC
in the
name
LLC name.
in order to do the S corp tax. Okay.
Because you'll want
I'm sure
separate
you
bank
did it.
account for your LLC. You'll want a separate business bank account.
Okay.
It'll be separate from your personal. You'll want to keep stuff separate. If you pay for something personally, the LLC can reimburse you. You want to make sure to keep good records of everything being separate.
Yeah, that was in the 1099 was to the LLC.
Yeah.
There is a kind of an odd workaround. If we come back and she says she can't do it in the LLC name, you could pay the LLC like a management fee. We could figure it out if we needed to, but that gets complicated.
I'm
I
pretty
want to
sure
get
it
into
is.
like shadow corporation and stuff,
Yeah.
Oh, gosh.
Shell company. Let's
Yes.
Shell company.
Shadow corporation in Murray, Kentucky. That's what we're.
Right.
Um,
For this one, anyway.
So it's a little bit of, it sounds like a headache. We can actually, our office for a single member, not for the multi-member, and it wouldn't be a partnership. It would just be an S corporation with more than one shareholder. And you'd actually have officers, but you can still do that. You would just need to go to an attorney and set up the LLC, the multi-member LLC.
Multi-member.
Yeah. And Greg can help you with that. And then we can help you with the S corp, the tax side of that.
Now, they also could set up individual LLCs,
Yes,
correct?
for sure. And just do separate S corps. And we can set up single members, but once you get into more than one person, the legal agreement changes a little bit in complexity, and we don't do that.
Is there advantage
That would
for
be-
tax purposes or no?
A partnership is still subject to self-employment tax.
So we would be better
So-
off forming our own LLC
Yeah.
individually.
You can do just the S corporation together. It just wouldn't be a part. It would just be an LLC that's.
You guys get
It's
separate
kinda up
checks
to
from the
you.
brokerage?
We do. Right now, I mean, she doesn't see my money, I don't see hers. We just get totally separate checks. They
Well,
split
then-
everything in half and I have
Well,
my
they could
check.
do
She doesn't
individual
touch my money, I
LLCs,
don't
right?
touch hers.
Mhm.
It's
Is
just
there
separate.
Do you guys
any-
have, do you have one check? Do you have one checking account that you
Because they
guys
have
write
no,
everything
they
out
have
of?
no need for liability.
How do you do that?
as a
We
company,
keep
right?
up with all our receipts and then
Um,
split it in half. Like I
The LLC
she
is
probably owes
always a
me
good
money at this
legal
point, but
sort of
then she'll
separation.
pay for some
Right.
stuff. We got a system.
You guys
That's
have
cool.
insurance and stuff for that, but.
Right, but I'm saying they could each individually do LLCs.
Yeah.
Without, they don't have to put it under one umbrella.
Because
'Cause they're
that would only
operating-
be under the eyes of Keller Williams,
They're
that you're a
operating
partner.
As a team.
Yeah, it's
but
just
they're
really
getting
as a
paid
partner.
Yeah,
individually.
because if you had your own
Yes, there's
LLC
no
and
So
she was
tax
with her
reason, there's no
LLC,
reason.
So they're getting their own.
then you just have like your
1099.
alias property.
Yeah. They could be separate.
Yeah.
Or you could do it together as a multi, like an S corporation, and one of you would be the president and one would be the vice president, and you could split everything 50-50. But you could also do it all separate.
That might be the way.
It might be. That sounds like
That
a
way,
good option.
if the partnership dissolved, we wouldn't have to go through all of that.
Well,
Not that
then
it would.
that
'Cause you're not
allows
gonna
you
put
the
any
benefit.
assets into it anyway.
No, that allows the benefit of you being able to say write off of your car and she writing off or not writing off and
Yeah. We can make our own
opting for your
decisions.
tax. Yeah, because
does
then you
make
get your
things easier.
income and
Anything
your
to make it
checks
simple.
would be written to your LLC and her checks would be written to her LLC. The same way, like if I would split, say with Kimberly, and we have a listing that we're sharing,
Yeah.
mine would come to Stevens Property Group, hers would go to what's your
Yeah.
LLC?
See, because so as I understand it, if her and Christy formed an LLC together and did an S corp election,
Mhm.
the brokerage would have to pay that LLC one check, and then they would have to divide it. would have to
Mhm. That's
pay
what the
individual,
difference would be. That's
right?
true. Well, she wouldn't know that. That would be a brokerage question.
No,
Well, she
it's
would-
not a brokerage
probably.
question.
No, she
That's,
wouldn't.
that's how it would go. If
No,
they
I'm just
formed an
saying that the
LLC
brokerage,
together,
yeah.
If that's the only LLC to pay, then yes.
they would
And
get-
then you would
they
have to
get
split
one
it.
check.
But it
and
would just
then-
be a business, then you'd be paying.
Yeah.
You'd be paying yourself anyways as a salary, and you could take distribution checks. There's a way to do that if you want to do it together.
I don't think so.
But
I
it's
like the
good to think
idea of
about.
just having it separate.
Oh,
Yeah.
yeah. The way you guys have operated, it makes
Yeah.
a lot of
Good,
sense.
it's decided then.
There you
Yeah.
go.
Christy has no say.
Chrissy has no say. Two separate LLCs, can you start
Voting.
voting?
Now, I know that's how she would prefer it too.
Yeah.
That way we can make our own
It's-
decisions. of
Yes.
how
It's
we
KRISTY.
Absolutely. I have a
Alright,
husband for
sorry.
sale cheap if you guys want an extra one.
Right.
Go
Um,
ahead.
okay.
Sorry.
What other questions do you have? Does that make sense to S corp? Does that? It's kind of
It's got, so instead of, because I think right now I put about 30% back of taxes,
Uh-huh.
really we'd be down to 15% that we would set back for tax
Um,
purposes.
you're gonna pay some of it yourself throughout the year, but that actually goes into like it does cut down on about half. I'm trying to think of how to explain it. Like that 80,000 kind of figure, if 40,000 is paid to you, you are gonna pay self-employment taxes
On the 40,000.
throughout
Mhm.
the year.
And that comes
That's
off
good.
our personal income tax, right?
You'll have federal withholding
Mhm.
throughout the year.
Oh.
But
Like-
that won't be on
So
the
then
S
you'd have
corp
to do
tax
quarterly?
thing, right? That'll be on
You-
the
That
personal
would
income
cut out
taxes.
quarterly.
You'll get a
Yeah,
regular
hold on.
paycheck.
Let's do that.
Yeah, lots of talking.
No, I'm sorry.
Uh,
Good thing we have a mediator here.
I said on the, you've got an S corp, so you have S corp stuff, and then you have your personal income taxes. You would do both. Say I take
Mhm.
40,000 personal, 40,000 is what the business earned.
And
My
then-
taxes on personal will be the personal income tax
Mhm.
on my personal taxes. And this, what do they pay on the S corp?
it goes nothing, and then you're going to pay $175 to Kentucky for the LLC, and then that 40,000 from the S corp is going to go to your personal, and then you're going to have 40,000 in wages, 40,000 in Schedule E flow through income, and that's going to all be subject to income tax, but not self-employment tax.
So all 80,000 then would be subject to.
Income tax, and that's always.
Now,
and
that is that just because we live in Kentucky, but if we lived in Tennessee, we would not be.
No, that's federal.
That's federal income.
Or the federal
tax.
income tax. Okay.
No,
Self-employment
federal
tax, you would still.
Self-employment.
Yeah, all of this is on federal that I'm talking about. That's not even considered Kentucky.
So when you, and I probably should already know this. So when she brought up quarterly taxes, so like when I didn't have an LLC, in the perfect world, I would have paid estimated quarterly taxes.
Exactly.
Shame
Like,
on you.
Do I?
So
Do
you
you
would
still
actually
do that as a S corp or LLC?
yes.
That's
Okay.
the question I was gonna ask.
Mhm.
So you're still gonna pay quarterly.
So the quarterly, so they might decrease a little bit because you will have some federal withholding on your wages, which you don't have right now.
Right.
So they might decrease, but you'll still, anytime you're going to owe over $1,000, you'll want to pay estimates in. And since you're still going to have income that you're going to be taxed on, you would still have estimates, but you would have that excess that's being paid every paycheck monthly that you don't have right now.
Well, now, if you're an LLC with an S corp election,
Mhm.
you're not going to individually pay quarterly taxes, right?
Yes.
Because you are, even though you're getting a paycheck from the corporation.
Because you're still going to have, so everything that I've talked about
Self-employed.
from now on is from the beginning was self-employment tax, but you also have income tax. So like before all of this LLC, before when you were making $80,000, you have the self-employment tax that's 15.3%, but you also have 22% of income tax. And that's
Gotcha.
where you guys are getting
Gotcha.
these like $30,000
So when you're taking the
tax liability. I mean,
when you're taking the
people-
regular
realtors get slammed.
salary, right?
Uh-huh.
Aren't the taxes paid on those checks?
Yes, but that 40,000 that's going to flow through is not, income tax hasn't been paid.
On the
Just the
distribution?
normal income, like just normal like tax bracket income tax.
So what the S corp does is it saves us from that self-employment,
Yes,
but it really only saves us from 7.5%. Part of the 7.5% we still have to pay, right?
it saves you from.
Or the whole 15% approximately.
So you're not. So that before where you were going to make, you're going to net $80,000.
Mhm.
You're probably not going to pay yourself $80,000.
Mhm.
You're going to pay yourself maybe half of that.
Mhm.
And so there's going to be this other 40,000 that's hanging out.
Mhm.
That can either stay with the company or it can go to you that
Mhm.
you're not paying self-employment tax on.
Okay.
So that's
So
like $6,000.
So the 15% approximately
Mhm.
would still come out of our personal
wages.
Yeah. So we get 40,000, we pay 15% of that 40,000.
And you're going to pay that out of your wages,
Uh-huh.
and then the LLC is going to pay it, which becomes a deduction that you don't have right now either. So that's going to lower your taxable income.
Okay.
And then this other excess amount that you're not paying yourself isn't subject to self-employment tax.
Okay.
So unless you give yourself a bonus check or something,
Mhm.
you're not paying taxes on this. This
Yes.
is why I don't want to do this.
I understand.
So no.
It's basically like it's like equity. So you're an officer of the corporation and you can take some of that money for yourself. The IRS frowns upon something that's not called a reasonable salary.
Uh-huh.
So if you're making $200,000 a year and you're paying yourself $15,000, it's going to be,
It's going to raise
and you're
some
taking
flags.
$100,000 of distributions, it's going to be a red flag.
Mhm.
But as long as it's sort of reasonable and your distributions don't usually exceed what you're paying yourself.
Okay. So that would be an issue if your distributions are exceeding what you're paying yourself. That makes
Yes.
sense. Okay.
So that's something to think about.
So when is a good time to establish the S Corp election? Do you do that like on April 13th when you're filing your taxes?
When you
No.
already have an LLC, as
Mhm.
like you guys do, you actually have to do it before March 15th.
Before March 15th
So you guys would be aiming to start this
for
for
2022.
2022. If you
Okay.
start a new LLC, you can
So
do
before
it within
March
75
of
days.
2022, we could do it, but it would be for the 2022 taxes filed in 2023. Am I correct?
Yes.
Okay.
So as far as this year, you might be able to file something that's called a late S Corp election and they might accept it.
Okay.
But otherwise you're looking at 2022. For a new LLC, if you can file the election within 75 days and do it for the current tax year.
And that S Corp election is filed with whom?
It's a form that we can do with IRS.
Anyone can do it?
You can find the form and
Or does
file
it have to be filed by an accountant or by an attorney?
You can do it
Okay.
if you want to.
Okay.
It's just a form that you'll send in with your EIN and LLC and EIN number and stuff.
Okay.
And you'll say want to be
So
taxed as an
The
S.
deadline for that tax year would be March 15th.
Mhm.
And then that's when you file your taxes the next April or March or whatever.
And you could do it now if you wanted to for the next, but it just wouldn't count for this year. But if you want it for 2022, you have to do it by March 15th of 2022.
Gotcha.
Sorry.
Yeah.
Does that make sense?
Yeah.
Is there any benefit? I have a friend who her kids are employees.
Okay.
And so they do like mailings for her and whatnot. Like, is there any benefit to adding family members as employees? Like, did I add Perry as my IT consultant? Like, and pay him a
there-
salary? Like,
There is something with children, and I think it's up, and I should know this, but I think it's up to a certain age. I think it's 16 where you don't have to pay self-employment tax on them,
okay.
but not husbands.
Well, that's unfortunate.
Yeah,
But
it's just kids.
yes,
Up,
When
up to
your own
16,
kid.
no.
Yeah.
Okay.
So when they're like one, you can.
you can pay them. No,
So like when my kids are working for me in the window.
but they're basically saying you're supporting them still, and
Sure.
they still have, when my kids are working for me in my window cleaning business, we still had to take taxes out of their check, but I didn't have to pay the matching
yes,
Contribution
contribution for this.
Yeah. It's not income tax. It's just that
up
FICA
until they were
tax.
16.
Until they were.
It's 14 or 16. It's something around there.
Yeah.
I
Yeah,
think
gotcha.
Something
Like
that.
part-time labor, sort of the age.
Free labor.
So yeah, at that point, I just started paying them under the table. It was much
It is.
cash.
Yeah.
Little tobacco farmers.
So we went over that. There's also retirement plans once you have an LLC. You can start retirement plans and start being able to put back retirement with pre-tax. So once you have an S Corp and you're an employee, you can start a retirement. Depending on it, how I know realty is kind of like this, but there's some sort of simple retirement options you can set up that you could put back money with pre-tax income instead of post-tax like you guys have to right now. So that's something to think about in the future too.
Do you have any recommendations on who to talk to for that? Like, y'all don't do retirement stuff, right? Like that would be like Edward Jones or
It would be
something.
or
My
American
brother.
funds or
Okay.
my brother.
Carrie's brother.
It would be something to tell me, and then I could make sure it's right on your payroll checks.
Gotcha.
And I can help make the contributions, but the actual plan setup would be with a financial advisor.
Gotcha.
But once you're an employee, you can set up
I
stuff
think I
like that.
already have something where
Mhm.
I put into retirement and it saves me on my taxes.
It does, but if you think about it, it's after tax. You're going to get taxed on all of that. Like it's going to be a tax deduction, but
It is.
when you're an employee, you can have those withholdings before they're subject to income tax.
Okay.
So there's some stuff to think about with that.
When you go on this complete change of subject, when you go on a trip, like a conference.
Yep.
I know with some of the rules changed as far as like meals, like all that. Would you consider all of that as education? Like your hotel, your transportation?
Family reunion.
Like when we go to, that's something like when we go to family reunion or mega camp or something like that, where it's like, okay, you go
Go
to,
down an extended period of time.
yeah, like
5 days.
what do you classify all that as?
So officially, anything that's anything that's business related, if it's reasonable, if you're going on I would say if you're going to go on a weekend conference for real estate, I would write almost all of it off.
Okay.
Like maybe not shopping, maybe not
Right.
really extravagant meals.
Yeah.
But I mean, if you're going for this purpose and you're going to be in meetings and you're going to go out to eat, and I would say all of it. If you're going to go like on a week-long vacation and maybe like a couple days are going to be business, then you might want to start being like, well, a percentage of this was deductible. But
It's not just visiting one real estate office while you're gone for a week.
Right. I've heard of people doing that.
Are you
Oh yeah, they'll stop at a real estate office and talk to them a little bit, and then they count the whole trip off as a business expense.
Yeah.
it's
So-
always good to think about how you would explain it to an auditor.
Yeah.
Yeah. If you would feel comfortable telling the auditor that, then do it. But otherwise,
Like I went to Louisville with my husband for his work trip, but I happened to find out about a class that was there too, so I went to the class and then I counted
Yeah.
my portion off.
Mhm.
Well, how
trip.
if
We
you're
only
there
went
for
one
like,
night, so
see, I'll write off the whole
You
thing
know.
because you're there for a
Yeah.
class.
that's what I
but yeah, when people go on
It's
family
all day class,
vacations
right?
and they don't really work at all, and then they write it off, that's where it gets
Yeah.
kind of sketchy.
gotcha.
It's 50% of the unreimbursed cost, though, right? On travel meals.
It's actually, I think COVID changed it for this year. It's 100%. There's a couple of tax things that everything has changed so much in the last
So your
year.
meals when you're traveling for work, 100% write off.
I think for this year and possibly next year, normally it is 50%. Travel is 100%.
Travel
Yeah.
meals are 100%.
Travel, like
Travel, the
yeah,
expenses
fare,
of getting there.
gas,
Yeah, right.
stuff like that. Meals.
So what is
Historically,
considered an
50.
entertainment-related meal?
So entertainment is actually under the last tax act in 2017. Entertainment, like tickets to stuff, is not deductible at all anymore.
So a meal that's part of entertainment is not deductible. So
I would
like,
say a meal is generally, if it has anything to do with business, is deductible. If you guys are going to go to like an
a dinner
NFL game
theater or
a concert and it's a business
right.
thing, that's no longer like
We're-
basically these
We're
big
writing off our
corporations.
meals
Huh?
when we go to
Yeah.
Austin.
No, I'm
But
not
if you're
saying that.
gonna
I've been curious
Uh-huh.
because the IRS keeps going back and forth. So, like for example, if you go to, Dolly Parton has her little horse show or whatever,
Mhm,
it comes a big meal, but there's a show with it.
mhm.
One year they said you can write off the cost of the meal, but not the entertainment.
Mhm.
Then they said you can't write off any of that because the meal is part of the entertainment.
I would argue the meal is, I mean, if it's a business dinner, I would
Yeah.
argue the meal is deductible.
I'm
But
talking
it-
about
yeah.
when you travel, you
Mhm.
know.
As long as it's a business Dolly
Yeah.
Parton experience. But it was just to get away from corporations buying like those
Yeah.
big boxes and NBA games and stuff like
Yeah,
that and
no
deducting
kidding.
that.
We just write off everything and let them sort it out. You tell us what's not right off the bowl. We'll fix it.
Yeah.
At what point does somebody need to decide if they should get an LLC or not? Like, is there a money
There is.
amount? Like, if you're
Um,
making this much, then you should do that.
The
or-
S corporation particularly, we don't usually start advising people to do that until you get to about the 50,000 net mark, because of some math in there where it just doesn't help you as much.
Gotcha.
Right.
But once you get above netting 50 regularly, it would be helpful.
And when you're thinking of netting, are you talking about like on your actual 1099 or on your your
like
tax,
commission checks, all of your expenses, net.
your net?
So not the top part, but
Yeah.
what you actually take home
Yeah, after expenses.
after mileage, after all that other stuff.
And I was saving this question for you too, because I don't think I asked you on my emails. But like, say somebody goes and shows a house for me,
Uh-huh.
and I want to pay them for doing that.
Uh-huh.
What's the best way to do that? Do I write them a check
Good
from my
question.
account? Do I go get a gift card and pay for it at the business and give it to them that way? Like, what's the best way to cover myself and get the biggest bang
Let's say
for
it's
the
another
buck, too?
licensed realtor,
Yeah.
and we're paying them say
Mhm.
$25 to do that.
The official way to do it would be to write them a check. And then if you write them over $600 worth of checks throughout the year, you actually are supposed to give them a 1099.
Right.
That makes sense.
Which brings up something else too, which is that we're not doing, but we probably should be, is that we should be, our LLC should be issuing 1099s to any vendor that we pay over $600 during the year, correct?
If it's not for a like a good, if it's for a service.
So here's an
So-
example. So I have a stager, and whenever and most years, I didn't this year because I spaced it out. I write a 1099 for the stager because
That
they're
would be
going to make
something.
more than 600.
Mhm.
Photographer. There's a photographer. I don't use them, but there's a photographer that has a photography business with whatever that's called, Real 3D.
Mhm.
And when we write him checks, it's going to the business at Real 3D. Do we write a 1099 to Real 3D?
Contact him and ask if he's a corporation. If he's a corporation, you don't have to. If he's not, you do.
So if he's say, what would it be, an independent contractor?
You do have to give him one.
We have to give him one. But if he is employed by them,
You would need to give one to the business that he's employed by.
we have to
it's
give one
unless
to,
it's a corporation.
unless it's a corporation. So
Weird
Real
rule,
3D
Weird rule. I don't know why.
may or may not be. So if it's a sole proprietorship, and it could be a very large sole proprietorship,
You're supposed to give them.
it's supposed to give them a 1099.
But if you contact them and they say we're a corporation, off
Who
the-
else do we write checks to?
But if you are buying like merchandise or something, you don't need to do that. Just
What about like you get your car repaired?
technically, yes, but that gets kind of.
Because half of that cost is parts, right?
What about if,
I have people that are in like farming or like things where you just have a lot of repairs where maybe
Right.
or reconditioning, like used car sales where they do that. But I mean, if you go to Harlan, I wouldn't do.
okay.
What about like dues? Like, our dues are over $600.
No, that's like a. I don't know where.
Okay.
Just stuff like that, like, and people like that are doing certain that are also self-employed.
Okay, so
Mhm.
taxes. So let's say that it costs us more than $600 to get our taxes done. 1099?
To get our CPA.
CPA?
Tell our CPA to write himself a 1099.
Technically, yes, we are a corporation. So no. Lawyers are the same. You're actually supposed to give them one too if they're not.
We have to give one to Greg Taylor.
He might be a corporation.
Oh, he might be.
So what if you?
And really, it comes down to like if they catch you, and it's
$100 fine.
it is a
per-
lot. It's a scary fine they talk about, but
It's $100 fine per 1099 you don't give out, right?
I would say like argue. I mean, you know that the people staging, you know the people showing, the photographer maybe, but I think there's an argument that you're not sure about some of these other.
Well, so like I give my son a 1099
Mhm.
when he was doing admin stuff. He's a licensed realtor also. And so my stager, I've always given her a 1099, except for this year because I spaced it out.
Mhm.
So I could get $100 fine for not doing it for this year for her.
I mean, if she contacts the IRS and says that you wouldn't give her one, it's kind of hard for them to.
I'll tell
It
her.
would be like, what would flag it would be like, let's say you paid the your stager $11,000.
Mhm.
Then she reported that on her income
As income.
staging income,
Uh-huh.
whatever. Then they want proof of that. Then if she gets audited, let's say she's not showing a 1099 for that, then she
That's
say,
fine.
"Well, Sue Ann didn't give me one." That's when it's
That's when you might figure it out.
yeah,
And a lot of times it's people with a lot of them that aren't doing them.
yeah.
It's more
They're
of
not
like
just gonna go,
an
"Oh,
overall
yeah.
business that
Yeah.
operates with them and they're not giving them out. And it's people that are trying to get their income confirmed and they can't.
Gotcha,
Not saying you
gotcha.
should
Okay,
do
so
them.
here's what I'm.
You should do them.
Yeah,
but,
we will.
But don't
So-
freak
but
out
I'm
about it.
curious. Yeah, well, actually, that's why my first stager isn't working for me anymore, because when I gave her 1099, it threw her into the wrong tax bracket and then it messed her up. So she quit.
People don't like self-employment.
She didn't like it. So this other one, so where the issue would be is if she needed to claim that income, let's say that she was trying to buy a house. I need to say, oh, I made $50,000 last
Right.
year and 11,000 of it came from this realtor or realtors. And I did not give her the 1099 to validate that. So she would have taxable income that was not really validated.
If she claimed it on her tax return, usually that's enough to show like this was my tax return, this is what I turned in. But
Yeah,
that could
usually
be
what they ask for.
Yeah,
not
they're
the
asked for
1099s. They usually just ask for your tax return.
because you paid the taxes on it.
Yeah, I was just thinking about if
Yeah,
someone
if she had
went
proof.
in and started picking around on her tax return going, can you prove that you, I don't know.
Yeah, like they wouldn't have a W-2 or something. I
Yeah.
see what you're saying. Mhm. But you guys sound like you usually do it the right way.
I've done it the right way.
Uh-huh.
It's just this year we had a brain fart because we joined and we became a thing and all that messed me up.
I understand.
No, I just couldn't keep my head together because everything changed. All our accounts changed, all our checking account changed, everything changed. So
I understand. This whole year has been nuts.
Yeah.
yeah.
Questions, because you pull on speakerphone, who's wanting to ask us.
Who does?
Brian Wyatt's got two
Sure.
questions.
Give them a call.
I told him if we had a pause.
Okay.
So if you want to, if there's any other
Yeah.
Do you have a
questions
minute to
anybody
answer somebody on speakerphone?
else- Yeah,
Okay.
he's in Paducah and couldn't come. But I told him I'd have to ask if this was allowed.
Thank you.
In case you have any
Um,
questions.
Is it kosher for me to ask how much you charge, like to help us take care of stuff like that?
Hey, Brian, the CPA is here, ready to answer your questions.
Hello.
Okay, well, good. Well, first of all, how are you doing?
I'm doing great. How are you?
Doing good. Thank you for taking the time for this. So, I didn't want to be a big pain in the butt, but all right. First question
That's okay.
is related to taxes and reporting and expenses. Is it best for? I've got a personal truck that I own personally, but I do have an LLC for my real estate. The insurance that we cover now for my truck is fairly inexpensive, but when I move it over to my business, it's going to jump up significant just because it's a business expense and I don't have anything else combined as a bundle for my insurance to drop. Is there enough tax benefits to offset that? And what's the benefit of having that owned by my LLC?
So when you purchase the
Yeah.
truck, I'm assuming it's purchased under your personal name and not the LLC.
No,
Mhm.
the LLC was just created shortly ago, and I've had this truck for 10 years. So I do pretty much everything I do is real estate related in the truck, and didn't know if there's a benefit to going over to the LLC.
So when you want to take like insurance and the truck and repairs and fuel expense, you can't take mileage as well.
Gotcha.
So I would
Yes.
say to look at your past returns and look at how much your mileage expense is. And then
Okay.
you can kind of compare that to what your insurance and what your upkeep expenses are. And I would bet your mileage is still more.
Gotcha. Gotcha.
And
Okay.
also because you didn't actually purchase the truck with the LLC, and you probably only have that vehicle to drive. Yeah.
Well, that my spouse's car, but that's my primary car.
Mhm.
But I mean, I would even go to the point of the LLC purchasing it from me to where that LLC did purchase the truck.
Okay.
Does that change anything?
I don't know that you could depreciate it. How much would you? It would have to be like a fair purchase price,
Oh, yeah, no, I'm not gonna do it for like $1.
or it could. I mean, it couldn't be like $50,000 either, and then writing it off. I would say, I know mileage is usually the biggest expense for a realtor, so I would still think that it would make more sense to keep it, and then in the future, if you looked at purchasing a new vehicle, maybe purchasing it with the LLC. And then you could write off the brand new car with depreciation, and that would be what maybe what you're thinking.
Gotcha.
Yeah.
Okay. Well, good deal. Okay. Second question, then I'll shut up. Do you know by chance, as far as taxes and reporting and returns and income, if an LLC can own a percentage of another LLC? As far as reporting, like, because what it is I've got my real estate LLC, and I've got I'm going to be investing with some partners into properties and other real estate ventures. That formed, in order to purchase that, is going to be one LLC, but I personally don't want to be involved in that one. I want to use my real estate LLC to purchase that, because otherwise, whenever the income comes into my real estate LLC, I'll have to then transfer it personally, and then be personally buy into this new business. Can a current LLC own a part of another LLC?
Both of the LLCs that you're mentioning, how are they organized? Are they disregarded entities, or are they partnerships or S corporations?
Right now, my LLC for real estate, its name is Flying Pig, and Flying Pig is a LLC set up as an S corp, because I'm going to have that to where I'm an employee of the S corp.
Okay.
So I pay taxes, I pay federal tax and all that wonderful stuff. And then that LLC, Flying Pig, would invest in another property with two other individuals, but that property will be owned by an LLC, and I'll just be a minority shareholder for that. But I wanted Flying Pig to know if that one could be a part owner of another LLC, or would me and my wife personally have to be partners in that.
I would like to say you can. If you would like, I could get your information and make sure for you, and get back with you on that, and maybe discuss it just a little bit more, just to make sure I understand how the second one is. And I can email you about it, and we can figure that out.
That would be awesome. That would be awesome.
If that's okay.
Basically what it is, it's two other investors are going in, and I would be the third going in to purchase some real estate, commercial real estate. I would be a 20% owner, just because of the investment that I put in, and almost a silent partner, just for capital reasons. But it's the LLC. Can that LLC be that silent partner? So
I believe it can. I believe it can be. Okay. My big question would be, how are they going to? Is it just a loan, or how are you going to be reimbursed for your investment?
It would just be a distribution at the end of the year, based on how the operating agreement and everything else is set up.
Okay. Like I said, I think the best way for us would be to talk about it just a little bit more, so I understand a couple more details. Sure. And I'll get your info from Kimberly here. Yeah.
Sounds great. Yes, she's got everything but my blood type. But it's
okay. Do you have any other questions?
No, I'm good. You did a great job.
Okay. Thank you. It was nice to speak with you.
All right. Nice speaking to you. Bye.
I just know that I need to look at it.
And I learned nothing from that conversation.
Right.
I just need
except the mileage and versus depreciation.
Yeah.
I don't think you could do that with, because he's owned the car for so long.
No, you can't do
There
that.
wouldn't be an
And,
insufficient amount.
and when we do depreciation, you're saying we need to buy a brand new car, right? Which
It can
I
be
always
no,
buy
it can be a
used.
used
Okay.
car,
But
but
I
it
think
needs to
you
be
need to-
new to you.
But yeah, you need to
And that's
decide
the
right away
argument there,
whether or not
is
you're going to do that,
it's
right?
not
Whether or not you're going to
new.
take depreciation or you're going to count the mileage.
The thing I think he's missing is that when you set up a subsidiary LLC that you own with your other LLC, the people who are loaning money are going to be able to see that structure, and they're going to reach into the parent LLC for liability of the
But
debt.
he's not. What he was doing, it doesn't really matter that much. But his LLC was going to go in with 2 individuals.
Right, but when they go to borrow money, say to do a real estate investment,
Mhm.
and they're going to use this LLC, which is a subsidiary of say 2 or 3 parents, the people who are doing the underwriting are going to understand the structure of this LLC, and they're going to reach into the parents for liability of the debt. You're not going to be able to form a shadow corporation or a shell company to shield you from all financial liability if it goes south, which is what it sounds like they're attempting.
Sounds like pretty complicated.
It's a great idea.
Back on my level.
I just knew I didn't have enough information.
Yeah,
No.
smart.
Okay, so here's another question for you. Say we have a deal and it comes down to repairs and stuff, and it's like, I'm gonna pay the plumber $100 to fix
Very
this. I'm just gonna do it so we can get this deal done.
That's right.
Which happens a lot.
Can I do that as like my LLC write that check to that plumber?
I think so.
And what would you deduct? Is that a
Yeah, where's
tax
that go on
deduction?
That's an expense.
I would say it's an expense, and I would put it in other and probably call it
Keep it a deal together.
closing costs.
Yeah, putting the deal together.
Calling
expensive.
it,
How to make money.
Concessions or something.
I
yeah.
actually,
I mean, it's something that you had to do to make your money,
Okay.
like to run your business.
Yeah.
So I think it's an expense.
so when I do that, what I have done, I don't know if this is the right way, but I usually attach that expense to whatever property it is. Like or to the buyer. So it's a buyer expense. If I'm working with a buyer and whatever, let's say $30 plumbing and they won't buy the house unless it's paid, I might do it then. But for the most part, it's usually a listing expense, and I'll pay, say, $150 to get the lawn mowed. So then I attach it to that address,
Mhm.
but it becomes a listing expense. And I don't even know what would you do?
I mean, I think you can really honestly, it's
Call it
not,
anything?
you're not just limited to what's on that piece of paper.
Well,
It's-
it says repairs, so would that be?
Yeah, you
I
can put it
mean,
under
I would
repairs.
put it under
Well, that's a
repairs.
good idea. Yeah.
And then if it's ever questioned, you can explain what it
Gotcha.
is. And that's
So you
really
need your
what it is.
invoice and your receipts. If you get audited, then you have proof. As long
Yeah.
as we get some type of invoice or receipt.
And
for
this is what I
that.
paid, and this is why I did it. And
Yeah.
it's not like you paid a personal repair on your home or something.
No,
Okay.
no. But yeah, we've done that on more than one occasion. when I figured
That's
out
crazy.
something.
I would
Right,
think
yeah,
that-
I want to count it somehow.
Carrie and I had a whopper of one,
Mm,
the bathroom one,
mm,
$700 a piece.
I had to do that too. We couldn't tell the seller.
mm.
We
Yeah,
didn't want the buyer to know that I paid part of it.
Oh, yeah, yeah.
We're like, we're just gonna keep this between us,
us, I
the other
know.
agent, and the seller, I think. And
Is stuff like calming down for you
I
guys?
think
or
like
is it-
Better Road. I did the Skywrite, and I don't know what else. Like Better Road. I think you have the other end of it.
oh yeah,
I
that one.
think I paid Skywrite, and I don't know what else I paid on that one to get it to close.
Yep,
But,
yeah.
Anyway.
Secrets of realtor.
Yes.
It's
Yeah,
usually
right
well
off.
worth it though. Instead of starting all over.
I write off paint when I go and I paint a house on my own. Like, not much. I painted all the
Yeah.
trim in a house and a fireplace.
You're better than I am.
Wow.
Mm-mm.
She probably hasn't done that in a while.
I haven't done it in a while. But I got the listing again.
Yes, you did.
The same one.
What are some of the things that we don't think of as realtors that we should be as far as tax write-offs? Is there anything that you've seen? I don't know how many realtors you.
We do a couple. We do a lot, but it's hard. Like, I think that's why the S Corp is the best route for you guys to go, because there aren't that many expenses. I mean,
Yeah.
Mileage, keep up with that the best you can.
Mhm.
And I guess you could, it's hard because you guys don't have a lot of equipment or anything. I mean, you can get a new laptop all the time and whatever, but
Well, I furnished 2 offices here. And then the other things that I write off are staging expenses, which is like furnishings.
yeah,
And
Mhm.
so that's really probably one of my biggest things.
storage for the staging. Or
I did
whatever you
storage. I
do,
wrote
yeah.
off all my storage, but yeah.
Yeah. Decorations can be staging.
Yeah, we store all of our staging stuff at our house. On our
Yes, we
couch.
do.
On your couch.
We do now.
Yeah.
I put it in 3 photos and then it goes on my couch.
Home office is what you can kind of get into sometimes.
Yeah.
It gets a little.
But if you have an office
sketchy.
rental here,
Exactly.
you can't do that. I understand that. And it has to be an
Is that a fact?
exclusive spot.
So you
That's
cannot
really the thing.
any
Is,
longer write
most
off
people
a
don't
home
have
office if you rent an office. That makes sense.
I mean, I think
And
you
then
could, but
has to be an
it has to be an
spot.
exclusive
Like I
spot
couldn't use my son's bedroom.
or your kitchen. It can't be your kitchen table.
Guest
It
room
can't
and
be-
an office, yeah.
I don't have one of those spaces right now.
Yeah.
We did the first year. I had a dedicated room upstairs. We wrote that off, but it was only like 100 square feet. It was like negligible.
Kind of,
Yeah, it was a little
What are-
tiny 10 by 10.
And
What are
usually
the-
rent for an office was probably more.
Substantially more.
What are the red flags that will get people audited?
Yeah.
Mm.
Like
Do you
that
have
we
any
can
audits?
avoid.
Drug money.
Usually it's getting income that you don't report.
Gotcha.
Things like getting 1099s and then your income that you report is less than that. High mileage can be one. That's why I say to keep up with your records really well. Commuting mileage is not mileage, and that's something that people don't get. So just
No,
you
but
driving here.
If you
is-
stop and run an errand on the way to the office, then
Yes.
that's not coming.
Uh-huh.
And do you have to put like when you're saying keep records, like are you keeping track of like, okay, whether this was a business or personal, like are you also putting like what purpose for business? Because the app I was
I've
using, you
seen
just
that.
would swipe if it was personal or swipe if it was
That's what I
business.
do.
That's all I was doing. But is that enough?
Because if you
I think if
hold
you
it
were
a little
to-
bit, it'll say what you're doing.
Yeah, I think if you're really to get audited, it would be best to say I was
More
driving to
specific.
meet this client. I was driving to
Showing
this showing, this address.
to live.
And maybe that's just having a good like address book or something, like
Yeah.
something that you could match it up with.
Right.
And then basically, like, if
Nice to
your
Thank you, Chelsea.
your average mileage say
Thank
is
you.
25,000 miles a year, and
Mm.
then suddenly 1 year you write off
That's the
75,000.
red.
That could be a red
Yeah.
So
flag.
25 is high, but it's probably not high for your profession.
No.
And it's just, yeah, if you just have a substantial change.
Right.
That didn't correlate with your sales. Or,
That is
I mean,
also
like
it. Yeah, if
'cause
your
if you have
sales
the
go
same
up a lot,
sales and-
mileage might go up.
Right.
If sales go down to like 5,000
Yeah.
and you write off
See, that's
60,000.
I was concerned about our taxes last year because income went way up, but the mileage went down. And it was because of COVID and
Yeah.
a lot of stuff was being done on Zoom and on.
And the IRS is pretty smart and they can usually
figure
figure
that
that out.
out.
I know I definitely adjusted mileage down this year for people that we estimate for just because people didn't go anywhere.
Right.
Do you see many people get audited? I mean,
No, not really.
okay. My parents got audited. My husband's parents got audited, so I'm paranoid I'll get audited.
Usually it's like I haven't been doing it as long as like Julie, but usually it's like letters that they send to just confirm something. It's not actually like an auditor coming
Check it out.
to see you. That I think they usually save that more for big, larger businesses. But yeah, anything that there's a copy of, like a 1099, a W-2, anything that shows income that is sent to them and you don't report, that's the biggest way that you get a letter from them usually. And a lot of times they'll just adjust your tax return and tell you that you owe this much tax.
Gotcha.
Yeah.
So maybe you can't answer this question, but so when you set up an S corp, you're going to do, like in Kimberly's case, you generate the checks and stuff, right?
Mhm.
You do her reports to the IRS.
Yeah. So
What
I
does
actually
your firm charge generally for that?
do you know what we charge you?
Is
I
it
think
one?
150 a quarter.
Mhm.
Is that right?
So it's a pretty simple, especially just with you guys. It's one check a month, and then it's usually quarterly payroll taxes, maybe monthly. And
So 600 a year you charge for that?
She sends me a
Julie does the billing, and I can confirm it with you.
And that's for one check a month.
One check a month, and then like your unemployment filings, your federal tax, like your Kentucky withholding, your W-2s at the end of the year are mostly included in that. We do charge per form. It's like 30 cents or something.
she'll email me and say, I'm taking out $1,200 or something for your Kentucky taxes.
But that
Just to give me a
basically-
heads up that I'm like, oh, okay. Like that I'll see it in my bank account gone.
Right.
And then she sends me a pay stub every month.
Just to
And-
remind yourself to write yourself. a
Yeah.
check.
And then I just write myself my check of what it says on there,
Okay.
So
Now, do you guys do bookkeeping, like
Yeah.
all P&L stuff and all that?
Mhm.
You know what you charge for that?
Depends on complexity, depends on how many bank accounts, credit cards, how well organized But
Oh,
it's all based off time.
so you had to say how well organized. I was thinking like shoebox full of receipts organized.
It's just based off time. I mean, if it
That's-
takes me an
yeah.
hour or two to do
Oh, I see.
bookkeeping, not so bad. If you give me the shoebox,
So
might either.
what if they're just
I would
paper
love for
clips?
somebody to take care of all that.
I do
That's what
too.
takes
I-
forever.
Yeah.
I mean,
Horrible
if
on
I
it.
do all that for you guys, I feel like I should just do my taxes and all that stuff. I'm like, well, I just plug in numbers now.
But
I'm
sometimes
sure
it can
it's not, I know
save.
it's not saying that your job's that simple, because I know
But
professionals have a lot of knowledge that we don't.
sometimes it saves because we don't have to figure all that out at the end of the year. So then your tax bill isn't quite as high because we have your record.
All you're doing is plugging in numbers
Yeah,
for us.
and then it really
trying
is kind
to-
of plugging stuff in and
Yeah,
talking about some stuff.
yeah, but you would know what would save us in our taxes more than we would.
See, I set up my QuickBooks accounts with the holy grail of Keller Williams chart of accounts that came from the Millionaire Real Estate Agent book, and it's so granular that I'm continually confused.
That was you were showing me.
It's like
Yeah.
instead of listing expenses, there's like 47 different.
There's a
listing
lot of
expenses.
sub expenses.
Yes,
in
it's
it.
crazy.
Yeah.
And
It
so
doesn't
then
have
I
to be
pull
that.
these reports and I'm like, oh, wait a minute.
Mm.
Then I'm finding out from month to month, I'm coding the same expenses differently because I forgot how I coded them last month. And the P&Ls are growing.
Yeah, and then it
Page
gets
by
annoying
page.
too.
I'm like, what? This thing has like
Yeah.
300 chart of a.
I don't think I
300
put all of them in there. I
And
think
on like
some
a
of them
tax
I
return, it
put
really
together.
just says repairs and
right,
maintenance or
right.
dues. It
And
doesn't
that's,
have
um,
like dues to this
super
person and dues to this
simple,
person
right,
and
And
dues.
the
Yeah.
CPA, so the
Super.
CPA that we use, I took this to him like last year, whatever. And he's like, dude, can you just get it down to like 12 or something? I was like, I have to comb through and combine all this stuff. He's like, you really need a line item for pens and paper.
You don't.
Right now.
Office supplies.
Yeah, office supplies.
Yeah.
No. MREA, it's more granular than that. Postcards, envelopes, stamps.
It helps you from a management perspective to see what you're spending money on.
Yeah, if
And
you're a
I think
big
that's the only
company.
reason why, because in the MREA book, they talk about like your percentage of, how you should be spending on this and that
Right,
and everything. So
Right.
I get why they have it broken down that much, but
It's not for taxes.
It just has to be as complicated as you want it, basically.
Mhm. Yeah, I didn't
Or
like that
else.
concept.
Or
yeah.
exactly. Any other questions?
Not for me. I think that's
If
good.
you start the LLC, you have more questions about the S corp, we
Yeah.
can help you with it.
Yes. I think we will have questions about that, but we first have to form all of that.
So here's one other question.
But I'm glad to know we could do it separately because we weren't sure how well that would work. So it's good to know
Yeah.
that because that will be I think
Unless
that
there's
might
a
make us make that decision because we're like, how are we going to manage this?
Uh-huh. And is it just that you want to be portrayed as a partnership? Like
We are a
for-
partnership for our clients. They know we
Yeah.
two for the price of one. And as far as Keller Williams goes, as far as splitting
Mhm.
money, we're a partnership.
but you're paid separately.
Yeah.
So nobody really needs to know that part behind. You can still
exactly.
present yourself the
As
way
a
you are.
partnership, we just, our money, we take care of ourselves, So,
Does anybody break their cell phone down into personal and business use?
oh, I hope not.
'Cause that's what the law
For something like
states, but-
you, probably not.
So we use it all the time.
A lot of times with different, it depends on what you do. I might say 75% business. It's usually just a rough estimate. For a realtor, I feel like you guys are on your phone all the time.
all the time.
Yeah. My home internet, I
Yeah.
do
A percentage of
majority
utility,
it, yeah, because
So you write off your home internet when you're
we are a percentage of it. I don't know that I have my husband figure out what our internet bill was, and I think we take a half of it or whatever for.
that's good.
Technically, you're supposed to only do that if you have a home office. I think it's,
Oh, really?
we do it sometimes.
Okay.
Because you don't get to do it here at your office because they do it. So
Right.
But sometimes
we can email you here. That's probably the best way to ask our
Mhm.
questions. Is
Yeah.
just send you an email to get those answered. Okay.
and then if it, we can always call if it gets more
Right.
complicated.
Exactly.
What is Brian's?
Brian
I
Wyatt.
think it's- I
Yeah.
don't think I have this in there.
Yeah. Weird. Look him up. 270-331 4554.
Did you say his LLC was called Flying Pig?
Yeah.
Really?
Something like that.
Yeah.
I've seen some weird ones though.
I could not decide. I just did my initials, KDBM. I did that before we got married.
Yeah.
I was like, I don't want to have to KDB.
Well, you have to search to see if it's
So,
available.
Right.
Sometimes it's hard to find stuff.
Yeah. I just couldn't decide.
One of my clients is LLCs. It's just initials, but the initials stand for I buy houses and make money. LLC.
That's-
IBHAMM.
Yeah.
LLC.
So when you're doing like bookkeeping and stuff, are you able to look at it before like the end of the year and be like, hey, you need to spend some money here and or
Normally, yes. The last couple of tax seasons have been so crazy, and every time they get extended. And so normally I'm like all caught up on bookkeeping. I didn't get to a tax season, and right now I'm not. But yes, we really do like to look and see how you are.
and that's got to be spent by the end of the year, right? Not by the end of like it's gonna be spent by like the end of 2021 versus like before taxes are filed, right? So that's something that's got to be evaluated at the end of the year.
I usually like to get in, like have a good idea of what stuff looks like by like October, and then you can kind of be like, oh,
There's a lot of stuff you have until April 15th of the following year to spend on, right?
like retirement,
Yeah, like IRAs.
stuff like that. Anything just straight, but usually
Advertising
business
needs
expenses
to
have
be
to
that
be
year.
fiscal year. Yeah.
I know Cardick told me if you spent money on a billboard because he said I'd rather spend money on a billboard versus pay my
Mhm.
that much out in taxes.
Yeah.
So I don't know if his CPA told him you need to go spend some money,
Right.
but that's why he said he ended up getting a billboard because he was like, I might as well give it for advertising versus
Yeah.
give it to the government.
Yeah.
If you know you're going to do
He
something,
did like a big
yeah.
chunk
Mhm.
for a billboard, but he's like, I'd rather give it to, put it towards that
Mhm.
taxes. So.
And we definitely see that with like farmers, they'll buy equipment before the end of the year. So
But if we were working with you, you would help us say, you need to go spend some money on advertising or whatever you want. by
this
the
is
end of
what
the
you're
year."
looking at right now, and it also just to get prepared for what your tax liability might be.
Do you know about the upcoming changes to the 1031 exchanges?
I've heard a little bit about it,
You
but
know
I
if
don't
it's
know
gone
if it's-
through or passed or it's just
I-
proposed?
I think it's just proposed, but I can get back with you on that. I was talking to a coworker about it the other day.
Okay. And they're proposing limiting it to 500,000 per individual or 1 million for people who are married filing jointly.
I know they want to cut back on it, but I don't
Yeah.
know that it's been passed yet.
And then they want to raise the tax rate on that capital gains income from like 26 to like 32% or something for individuals with over $1 million net worth. It's going to really hurt the 1031 exchange.
Property type.
Yeah, the investment property